I'm Ryan Iverson, and this is the Investor Breakout Weekly Insight. Let's talk about what happened this week. Curaleaf wants to buy Aurora Cannabis, and Aurora isn't exactly coming willingly. Curaleaf has announced plans to launch a takeover bid for Aurora Cannabis after multiple attempts to negotiate privately were rejected. So now it's taking the offer directly to shareholders. The proposed deal would give Aurora investors $4 in Curaleaf shares plus 75 cents in cash for each Aurora share. And the strategic pitch is all about scale. Together, the companies generate more than $1.5 billion in revenue over the last 12 months. The combined businesses would also operate across 17 countries, pairing Curaleaf's distribution platform with Aurora's international medical cannabis business and production capacity. Curaleaf believes the combination could generate at least $40 million in annual cost savings. But there's already pushback. Analysts at TD Cowen argue the current offer undervalues Aurora, pointing to its medical cannabis leadership, balance sheet, and international growth potential. So now things get interesting. Curaleaf says the strategic case is compelling. Aurora's board hasn't engaged. And shareholders may ultimately be the ones deciding whether $4.75 is enough to get this deal done. What if building a gold mine didn't require building the mill? That's a big part of the story behind Scottie Resources. Listed as SCOT, Scott, on the TSX Venture Exchange. After being named the top pick at CEM's Scottsdale Capital event earlier this year, Scottie caught investors' attention again in Kelowna, this time earning a top 5 pick at CEM's 100th Capital event. And since Scottsdale, there's been plenty of progress. Scottie's flagship project in BC's Golden Triangle currently hosts about 700,000 ounces of gold at an average grade of just over 6 grams per ton. The company now has 7 drills turning as part of a fully funded 50,000 meter program, the largest exploration campaign in its history. But here's where the story gets interesting. Scottie's current plan avoids building a conventional mill and tailings facility. Instead, ore would be mined, crushed, and sorted on site. From there, it could be trucked about 40 kilometers to the Port of Stewart and shipped for processing through the company's arrangement with Ocean Partners. And they've already tested the concept. A 10,000-ton bulk sample successfully moved through that entire process, from mining and sorting to trucking and shipping. Now, engineering for the feasibility study is about 95% complete, with the full study expected in the first half of 2027. Management is targeting the first production in 2028. So the next phase is about turning a high-grade gold resource into a mine plan the market can really measure. The full Scottie Resources editorial spotlight is coming soon to investorbreakout.com. I'm Ryan Iverson, and we'll see you next week.